You know, if this thing takes off, I wonder who's going to want it to stop, because the government has clearly set itself up to benefit from inflation.
Right.
It's the only scenario under which the government can remotely dream of paying back its debt. Consumers are now complicit because they've been kind of prodded into the same lifestyle the government maintains, where you know, they're in great shape as long as their homes are increasing in value. So if you're living high on the hog on a debt basis, you want inflation. So I don't know who's going to complain when it starts.
Well, except that the U.S. dollar could come under a great deal of pressure. And remember that we don't save enough money. If the rest of the world decides they've had it up to their keister with the U.S. dollar and they start dumping it, and then we see interest rates starting to spike up on all that debt, it could be very interesting. I really think, my own belief is, the most likely trigger for a Kondratiev winter, as my friend Ian Gordon talks about it, or a Great Depression, is that if the United States, the ruling elite, decided that that the United States was going to lose its ability to prosecute its wars everywhere, and 120 or 40 countries, whatever we're in, it's enormous military expenditure. If it cannot finance that, and the United States can no longer remain the military power, which is how we're not an economic power anymore. We're maintaining our might around the world with our bombs and with our weapons. If we can no longer do that, I believe that the ruling elite might consider putting into the Federal Reserve somebody who will do exactly what Paul Volcker did in 1980, and that is tighten interest rates to protect the dollar, to try to save it. Then I think we get interest rates with the enormous amount of indebtedness that we have now that would certainly trip us into what Ian Gordon is talking about, the Kondratiev cycle. To me, that's the only conceivable reason why the establishment, the ruling elite, the government, would allow something, would not continue to inflate, is if, on a global scene, we can no longer maintain our preeminence as the world superpower, and we start to see the Chinese and the Russians and other people starting to get the upper hand. I can't believe that the ruling elite, the people that form the Federal Reserve, the banking interests that control that private corporation, would sit idly by and allow the United States dollar to go to hell. That's my thinking on it. And I actually put this question to Ron Paul and Mark Faber in San Francisco. They couldn't see it that way. They can't perceive of any time that the Fed wouldn't continue to expand the money supply and print like mad. But I'm thinking the same thing was true in 1980, when nobody wanted the dollar, everybody wanted to buy gold, Deutschmarks and Swiss francs, and out of nowhere came Volcker with a 180-degree policy change at the Federal Reserve, and whammo, I had a 17.5% mortgage the first time. We had interest rates that went to the moon. We had the deepest recession since the Great Depression. So, and aside from an accident that could cause this thing to spiral on the downside into a deflationary collapse, that's my belief. They would do it to preserve paper and to keep their power status in place. That's my thinking.
Ian, people come to these shows, and certainly the five of us are involved in this industry because we are searching for ways to protect ourselves. Okay, I mean, I don't think it takes a genius to figure out right now that the U.S. economy probably is unsustainable long term. I really don't think it takes a genius to figure that out. But we're a free country. Canada's a free country, etc. In that context, what can we do to protect ourselves?
Well, I think you have to buy gold, and that is really
purely and simply, yeah.
It's the asset of choice. So what I consider it the asset of choice in the Kondratiev winter, and Jay talked about a one-to-one relationship, Dow Gold. Now, those relationships, the only time we had a one-to-one relationship when gold was free, the price was free, was in 1980. The Dow and the gold were equal. Before that, the gold price was fixed, initially at $20.67. So in 1932, at the end of the stock market crash, you had a 2-to-1 relationship. I believe what we're going to, and if we repeat, and I do believe we are going to repeat the bear market 1929-32, we've just had the massive bull market, we're now going to get a massive bear market, and if we repeat the 29-32 experience, it means the Dow is going to drop somewhere between 13 and 500. That is just simply repeating the 29-32 experience. And if that happens, gold isn't going to be 500, gold's going to be like 3,000. So you're not going to have a one-to-one relationship. You're going to have probably 1 to 6.
Yeah. The interesting question here in my mind, and any of the three of you are obviously more than welcome to answer this, but in my mind, I don't see how holding precious metals, gold or silver, and purchasing equities in companies involved in that industry, I don't see how that could be a reckless action. To me, that makes all the sense in the world. I don't see gold really. The equity market, I believe, once it catches on in the U.S., which it will, I mean, gold stocks are going to come back in favor again. It's just a matter of time. I don't see gold dropping below, let's say, $500 an ounce, if at worst case. Most of the mines, most of the companies, for example, at this show would love to know that the price of gold is going to sustain itself above $500 an ounce. That train of thought, that line of thinking, to me, just points my family and I in the direction of wanting to purchase more and more gold and silver stocks. Any comments on that?
Technically, and Ian does this too with the charts, the gold this morning was 638, and the Dow is down 100 this morning. I think it's around 12.5, 12.6. But the point on gold technically is that a new higher base has been formed at around at around 600.
Yeah.
And in watching and trading, in my trading letter, the various price points in gold, there's strong protection at 620, at 650, 680, 720, 740. All those are key points. And periodically in a rally, when you get above a key point, your former resistance becomes support. And when you get a strong enough support at that new higher level, that becomes your new base, and it just continues to climb from there. So to answer your question, most people right now are saying that 575 is probably where we are currently, and technically as a bottom base support to stay on a 200-day average. I think that by April we'll see 720, 740, and these lower bases are going to continue and go higher.